Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And I'm very grateful for life and glad to be with you here this morning as we are going to be taking another fresh new look at the financial market. Well, apologies for the delay. I've been dealing with a stomach bug in the last 12 hours, which means I've been making more visits to the bathroom than to my desk. So I really appreciate your patience, everyone. And I think I'm a little bit better this morning, so we can dive right into the business for today. Well, in the last 24 hours, the financial landscape has gone through an interesting dynamic as we saw how the US dollar still maintains its stronghold amidst its major rivals in the market. But in the last 12 hours, we begin to see some slowdown in momentum as we look forward to major economic features coming in from the US economic dockets today. So we are going to be taking a fresh new look. In fact, I have conducted a comprehensive analysis on all of the assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And for those who are with me on both my TradingView and Telegram platform, you would have gotten an update on how we are going to be managing our trades for today. So once again, you are highly welcome on board. And for those who are joining us for the first time, I welcome you on board. I'm glad to have you around. And what we simply do here as technical traders, we come together as a community on a daily basis to review our existing position if we have any, then use the information we have on the chart to strategically position ourselves ahead of both the London and the New York session. Technically, the live stream starts around 9:05 a.m. West African time, 8:05 a.m. UTC, and we of course do this on a daily basis, and I encourage you to stay tuned in so you don't miss out on any of the valuable insights and ideas we will be deliberating on through the course of this session. And I also encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how things works here and eventually be able to use the information you gather here to guide your own independent trading decisions. So once again, you are highly welcome on board. Now, with that being said, here we shall be diving right into the business for today. And as usual, we will be looking at the economic calendar. Unfortunately, I don't know what happened here. My economic calendar has already been closed. I don't know why that is, but we'll just load it up one more time. And then we zoom into this week's features. Okay, so we have this week futures here, and so like we used to do, it's our daily routine here to check on the economic calendar, as this gives us, as we all know, that these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can make us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, on the economic calendar for this week, we will be focusing on high impact events from both the United States and the United Kingdom, as these economies are the only one that are affecting the assets on our watch list for this week. Now, for Wednesday today, October 4th, we have two high impact events that we are going to be looking forward to. And the first one here is coming in about 3 to 4 hours from now, and that is the ADP employment change. Now, for those who don't know what the ADP employment change is, well, this is an employment change released by the Automatic Data Processing Incorporation, and it is the measure of the change in the number of employed people in the United States. Generally speaking, a rise in this indicator has positive implications for consumer spending, hereby stimulating economic growth. So traditionally, we want to be looking for higher readings to give us an insight into a strong US economy. Now, if we look at the previous data here, it came in at 177,000, that is for the month of August, and economists are projecting 153,000 for the month of September, giving us an insight into some contraction in that sector at this point in time. So we'll be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then 2 hours after the ADP employment change, we are going to be looking forward to the ISM Services PMI, another high impactful event from the US economic docket. Now, this is released by the Institute for Supply Management, and it shows the business condition in the US non-manufacturing sector. It is worth noting that the non-manufacturing sector does not influence either positively or negatively the GDP as much as the ISM manufacturing does, but any data above 50 is considered as positive and in the long run bullish for the US dollar. Now, from what we have here, figures are beyond 50. Of course, the US economy has been very resilient in recent times, and the previous data came in at 54.5 for the month of August, and economists are projecting 53.6 for the month of September. So that also shows us there is an expectation of a contraction in that sector too. Now, what we are going to be doing here as technical traders is to sniff through the current market structure, as by now we all know that the anticipation of these events alone has a tendency of influencing the market sentiment. And of course, as everyone anticipates this event, we begin to see the gathering of momentum in a particular direction. And what we are going to be doing here as technical traders is to try to identify the structures and patterns so that we can use them to position ourselves in such a way that we can capitalize on this potential move. Now, with the information we have gathered here on the economic calendar, let's dive right into the chart and let's look at things from a technical standpoint. Now, as usual, the first asset we are going to be looking at today is going to be the US OILSPOT. Now, on the US OILSPOT so far this week, we have been doing pretty well. Remember yesterday, we were running with about 250 pips. Unfortunately, we only had one position running in this particular market. Now, let's look at what has really been going on in this market since yesterday and as what led to the idea of selling this asset at the beginning of the week. Now, let's look at the structure from the 1 hour time frame. Now, remember that our focus on the Forex Morning Mastery is basically on the 1 hour time frame, which is our execution time frame. And for those who want to have a background knowledge of how we got to this point, then I will advise you to watch my video on the Forex Morning Mastery for Monday session. You can check on my channel. You will see it right there. It's located there. So you can check it out and see how I did a top-down analysis and how we were able to identify the key levels that we said we will be using to guide our trading decisions for this week. Now, so during the course of the early hours of this week, we acknowledged the $90 area, which happens to be our key level for this week. And in fact, we saw how price action kept oscillating just right around the $90 area at the beginning of the week, which further emphasized the level of indecision at this point, giving us a scenario where price was confined between the $90.40 level and the $89.80 area to emphasize the level of uncertainty at that point in time. And of course, you know how we do it in this community. When price action falls into a range like this, that is, there is an indecision in the market, we have no other choice than to exercise patience, waiting for either the breakout of the resistant line for buying opportunity or the breakdown of the support line for selling opportunities. Now, during our live session on Monday, we acknowledged that we had the buy position running, and of course, we had price moved about 50 pips thereabouts in our favor before sellers came in. And of course, if you had moved your stop loss accordingly, like we always advise here in this community, as soon as price moves significantly well in our favor, you must have been taken out with a modest size of profit or at a worst case scenario break even. Then something interesting happened during the New York session on Monday. As we saw a couple of hours into the New York session, we saw our price action broke down the key level at the $90 area, which of course is a sign that we want to be getting ready to sell, as we know that if price remains below the key level, we are looking out for structures and patterns that supports the idea of selling that asset. Now look at what we have here. We had price break down the key level and the $89 level. We saw price come back to retest the structure to incite that downtrend move, and since that moment we have been selling the US JOLTSPOT. And one parameter we have here, which we were using as a yardstick to guide our trading activity for this week, is this beautiful descending trend line. So after connecting the series of lower highs here, we have a descending trend line to work with, and in fact we had agreed here on Monday that as long as price remains below that descending trend line, we shall feel comfortable in our sell positions while we also look out for more opportunities to sell. Now, the only condition that will make us buy the US JOLTSPOT at this point in time is for price to break out or breach that descending trend line, which is yet to happen at this point. So now with the situation we have here, we're still holding on to a bearish bias. And for those who still have a sell position running right now, it is appropriate that you move your stop losses accordingly. Let's secure this current sell position. And from the current market structure here, I will be suggesting that anywhere above the $88 area, which falls above that descending trend line, will be very suitable to secure all sell positions in this market. Now, with a well secured sell position, what is going to be our next line of action for today? Now, one thing this morning while I was trying to dissect the current market structure in the hopes of identifying the potential direction price is likely going today, I was able to spot the fact that the $87 area had played a major role in buying pressure in this market, as you will see that since price tested the structure during the early hours of yesterday, we saw buy pressure resume around that area. And in fact, in the last 24 hours, price is yet to break through that area, which further emphasized the level of buying pressure gradually building up behind the scenes. And of course, we shouldn't forget that there is this ADIPEC summit happening in Abu Dhabi right now, where oil ministers and oil producers are having a summit, and it started on Tuesday and it will last through till tomorrow. And of course, I'm yet to get an highlight on what the developments are there. But one thing for sure in the market is that everyone is looking out for any significant or any sentimental statements that could incite trading activity or incite price movement. And what we want to be doing here as technical traders is to try to understand the psychology behind price movement on the chart so that we can capitalize on any move even before it gains the momentum. Now, with the way things are going right now, as long as price remains above that $87 area, we would be very cautious of placing any sell position at this point. The only condition that will make us want to be selling here is for price to break through, taking out all the buy positions around the $87 area, then a retest of structure confirming that sellers are going to be dictating the pace. Then we can join a bearish move to the downside or add more sell position to our existing trade. So at this point in time, we are not going to be selling unless price breaks down and retests the $87 $5 zone, taking out all the buy positions around that area. However, if instead what happens here is if this platform around the $87 area continues to hold bullish pressure, then a breakout of the descending trend line, which interestingly shares a confluence with this $88 area, will be signaling a momentum shift. And in fact, if price breaks out of that descending trend line, this will be the first time price will be breaking out of that structure in the last 1 week. And a breakout here will be a comfortable opportunity for us to join a bullish move. And in fact, to have a good confirmation here, it is reasonable to wait for a retest of structure where the appearance of buy pressure around or above the $88 level will be giving us a beautiful confirmation to join the uptrend scenario. Now, there are two ways to which we can capitalize on breakouts here in this community, which I've always emphasized times without number, is if we are going to be capitalizing on a breakout or breakdown of structure, it depends on where you are with us. Now, for those who are already profitable, that is those who have been part of the profitable journey since the beginning of the week, then you're already profitable, you're already on the positive side of your portfolio, so you can afford to leverage on some of the profits you had made so far to test waters around the breakout or breakdown of structure. So in that regard, you can afford to place a buy stop order above the $88 area to capitalize on the uptrend scenario here, or a sell stop order below the $87 area to capitalize on the downtrend continuation. However, if you are new with us, that is, you are coming in from a clean slate, you've not taken any position with us so far this week, then I would advise you to remain patient for confirmation. So we want to be looking out for a breakout structure, scale down to your lower time frame, look out for retest of structure before jumping into that position. And for the case of the selling potential here, a breakdown, retest of structure will welcome the sell position. So this is how we are going to be managing our position here on the USOILSPOT today. So our center of focus is basically between the $88 level and the $87 area. So depending on what happens here, depending on what breakout happened here, will determine where price will be going for today. So let's mark out these levels on our chart and let's see how the market will play out from here. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update if any significant setup comes up on this chart. So if you have any questions whatsoever as regards to the current setup, or you need me to do some clarifications, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move right into the next financial asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comments. Adeni Babalola, good morning to you, and glad to have you around with us this morning. So with that being said, let's move on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, and in fact we already have a buy position running at this point in time, as price action did finally broke out of both the 1.21 and that descending trend line I talked about this morning. And for those who are with me on both my TradingView and Telegram platform, you must have gotten an update as regards to this current setup, and I do hope you have taken advantage of that move. Let's hope the price will continue to the upside here. And for the sake of clarity, let me run through what my commentaries were as at this morning on the GBPUSD and how we said we are going to be managing our position this morning. Now, I stated here this morning, let's scroll down and see what I said here. So, the Bank of England Governor Andrew Baylis had an interview this morning where he stated that retaining the UK's that he will be retaining, that he does not support the readjustment of the inflation target for the United Kingdom, which is currently sitting at 2%, and this has cast a shadow of caution across the market. And one thing you will notice in the market is that there has been a risk-averse sentiment, leading market participants to tread carefully, especially when it comes to significant positions. Over the last 24 hours, the market has been trapped in a narrow range, fluctuating between the 1.21 and the 1.206. This tight range vividly illustrates the prevailing indecision amongst traders. Now, our strategy for today is that all sell positions should be adequately secured, as you will see that the 1.20600 area is gradually transforming into an accumulation zone, signaling a potential shift in market dynamics. Now, with our sights set on the horizon, we eagerly anticipate the release of the ADP employment change and the ISM services PMI, which of course will be giving us a crucial insight into the strength of the US economy. Now, if we go back into the live chart, this is what I was trying to say in my commentary this morning. Now, if you look at the structure since the beginning of the week, we have been selling the GBPUSD. Remember, we had this range here where price was initially confined within the 1.22080 level and the 1.21760, giving us an indecisive phase. And of course, you know that we want to be waiting for either the breakout or breakdown of that range to give us an opportunity to trade. And of course, we saw price break down the support line here a couple of hours into the New York session to trigger our first sell position for the week. And since then, we have been selling, adding more position all the way down into the 1.20600 area. And of course, if you had moved your stop loss accordingly, you must have been taken out from this position with a modest size of profit. Now, in the last 24 hours, something interesting has been going on in this market, and that is the confinement of price action within the 1.2100 area and the 1.20600 level, which further emphasized the level of uncertainty in this market. Now, when price falls into a range like this, you know how we do it in this community. We want to be exercising patience, waiting for either the breakout or breakdown of that range to give us a signal of where price is likely going. And another parameter we are using here to guide our trading decisions is the descending trend line we spotted here at the beginning of the week. So we had a couple of descending trend line here. So let me highlight them out so you can see. So we have the first one right here. And then we have the second one, which is the major one right here. And one of the things we agreed here is that if we are going to consider buying the GBPUSD, we would need these trend lines to be breached to the upside. And one interesting thing about this trend line is how it shares a confluence with that 1.2100 area, which I identified this morning, and I told us all that we shall be capitalizing on a bullish move at the breakout of that structure. Now, right now, price has broken out of that level, as you will see right now. So we have about 30 pips approximately running in profit at this point in time. Now, with a breakout of structure here following, especially after an accumulation zone where we saw how it became difficult for sellers to successfully break through the 1.206. For me at this point in time, I am of the opinion that a momentum shift is gradually unfolding at this point. So I'm going to be changing my bias to bullish here. Now, there is a caveat to how we are going to be managing our positions right here. So let me show you quickly what I mean here. So if we zoom into the current structure at this juncture, you will see price has broken out of both the trend line and the 1.2100 area. And of course, from a technical standpoint, when price action breaks out of a key structure such as this crucial juncture we have here, we expect that some point in time price is likely going to come back, retest the structure, the trend line, or the 1.2100 area, where appearance of continued buy pressure will give us more opportunities to join that uptrend move. So for those who had missed out on this opportunity, let's exercise patience and wait for new structures to mature before we jump into a buy position. So let's see if the market will give us a second chance, coming in like a retest of both the descending trend line and the 1.21 area to capitalize on an uptrend continuation. So let's see how this is going to play out. For those who took advantage of this buy position, well done to you for being on standby, and I do hope you've been able to place your stop loss. Very, very important. So stop losses will be anywhere below that descending trend line, and of course we do want to be given enough room for price action to breathe. So our stop losses could be between 30 to 40 pips, and let's see how far this momentum is going to go. So at this point in time, as long as price remains above the descending trend line and the 1.21, we hold on to a bullish bias. But the only condition that will make us start considering selling here is for price to take out all the buy positions at the 1.20600 area. Remember, this level here had been very difficult for sellers to break through in the last 24 hours. Now, if I am going to consider selling here, I would like to see price break down the structure, retest, then we want to be joining a downtrend move. If this does not happen today, I wouldn't be considering selling the GBPUSD on this chart at all. So let's see how the market will play out, and of course I will be with you in the comment section of both my trading view and Telegram platforms to give you updates if any significant setup comes up along the line. So I don't know if you have any questions whatsoever as regards to my explanations, or you need me to do any clarifications, or you have anything you want to ask, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. All right. So in the absence of no questions, I want to assume that we are on the same page here. So permit me to move right into the next and the last financial asset on our watch list for today. So the next asset on our watch list for today is the XAUUSD, my favorite, popularly known as the gold spot. And we have been selling the XAUUSD since the beginning of this week, sincerely, and we've made quite some profit on this one. I think we have roughly over 200 pips or close to 200 pips on this one, and personally I already have all my sell positions closed as we moved our stop losses accordingly, taking out all our sell positions at this point. And just like what we saw on the GBPUSD charts, we have a similar scenario here where price action has been consolidating in the last 24 hours to further emphasize the level of indecision in this market. And one of the major structures here that we were using to guide our trading decision for this week is that descending trend line that we have here. And after connecting the series of lower highs, we have this descending trend line, and our agreement here is that as long as price remains below that descending trend line, we feel comfortable selling, and of course look out for more selling opportunities. However, if you look at the structure closely, it appears that sellers are gradually losing that momentum. Now look at in the last 24 hours, you will see how the $1,817.50 level has held steady for buy pressure. So sellers have found it difficult to break through this structure, and for me this is a sign that we might likely be seeing a reversal setup anytime soon. And of course, you know that we are looking forward to key economic event from the US economic docket today, the ISM Services PMI, and of course what other one is that one again? We have ADP employment change, which is a labor data. Now, with the way things are going right now and the inability of sellers to break through the $1,817.50 level is a level of concern for me. And in this case scenario, the chances that this descending trend line will be broken to the upside hereby increases. Now, for me to consider buying the XAUUSD today, I would like to see a breakout, retest of this descending trend line to join a bullish move. And if you look at what has been going on here in the last couple of hours, we already have a breakout of that descending trend line right here with an engulfing bullish candle. And if price will come back, retest the structure where continued buy pressure on our lower time frame happens, we want to be joining that bullish move and then have a buy stop order above the 1,825 to capitalize on more opportunities. A further breakout of the 1,831 level will be welcoming more opportunities or giving us more privilege to maximize the potential of this bullish move. So at this point in time, buying the XAUUSD for us today, we are only buying if the trend line is broken, which has already happened. If you are taking advantage of that one, well done to you. But personally, I'm still waiting for a retest of structure, but I have a buy stop order above the 1,825. So if a retest does not happen, a breakout of the 1,825 will be triggering a buy position for me, and in fact our first buy position for the week. So that is how we are going to be buying the XAUUSD for today. However, if price drops further to the downside and taking out all the buy positions along the $1,817.50 level, then at this point I want to be considering a downtrend continuation. So I will only sell if price drops back below the $1,817.50 level to the downside. So that's the only condition that will make me want to be selling the XAUUSD today. So these are my views here. It's a simple setup we have here on the XAUUSD. As our center of focus for today is basically between the 1,825 and the $1,817.50 level. So if price breaks out of the resistance line, we hold on to a bullish bias, and if price drops below the support line, we get ready to join a bearish move. So let's see how the market will play out in the next couple of hours, and trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you adequate updates as at when due. So I don't know if you have any questions whatsoever as regards to the current setup. Feel free to let me know in the comment section, as I will be taking the next 10 to 15 seconds off, and you can use that time too to mark out these levels on your chart. All right. I'm about to go to the toilet again. I'm having a rumbling in my stomach right now, so I would want to be rounding off. If you still have questions, let me know in the comment section. So I just dropped a link in the comment section right now, and that is the link to the XAUUSD live window. Now, for those who don't know, this platform was born out of the popular demand from our trading community here. We gather daily to monitor live trading activities on the gold spot together, especially during the New York session. So the live session for the XAUUSD live window kicks off just a few minutes into the New York session, allowing us to dive into real-time trades and market analysis. So I look forward to seeing you guys in the comment section of the XAUUSD live window. So you want to stay updated and never miss a moment, click the link in the comment box below and hit the notify me button. This way you will receive instant notifications the moment I go live. So I encourage you to engage in the comment section of the XAUUSD live window. Your questions, insights, and energy makes our session a lively and dynamic one. So I look forward to seeing you all in the comment section of the XAUUSD live window, like I've said. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how things works here, and eventually be able to use the information you gather in this community to make your own independent trading decisions. So on this note, I wish us all the best of luck, and please don't forget to support this project. If you have found this content helpful and useful in making your independent trading decisions during the London and the New York session, kindly support this channel by giving this video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you very much as you do so, and for those who had already liked this video, thank you very much for your support. So I look forward to seeing you all in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.